The real estate market has seen its ups and downs, but is now the right time to invest? Stick with me as I let you know my thoughts. Hi, I'm Emmanuel, and welcome to If I Can, You Can, the channel where if I can do it, you can do it too. I go over real estate investing and home renovations. If you like what you see, please like and subscribe below. Leave me a comment. I always like to hear what y'all have to say. But today we'll be going over real estate investing. Is it still a good time to invest? In this video, we'll be breaking down the latest trends and see if right now is the right time for you to dive into real estate. Making a smart decision today could set you up for long-term gains or a big loss if you're not careful. Number one, current interest rates. They are at a high, and they are much higher than they were a year ago, but they are starting to come down, and historically, they're lower than they normally are. Rates have been fluctuating, but if you're able to lock in and the interest rates drop in the future, you may have the option to refi and get that lower rate and lock it in. Now, I highly recommend getting a fixed mortgage, or I highly recommend getting fixed rates. That way, if something goes wrong and rates go skyrocketing again, which unlikely to happen, but if it happens, you're at least locked into the rate you are, and you always have the option to refinance it in the future. Now, the bad news for real estate investors is with these higher rates, it's going to lock you in at a higher mortgage payment, which means you're going to need to get higher rent to offset the mortgage payment that you're going to have to pay on the properties. Right now, I think this is one of the leading factors that's hurting people getting into the market, is seeing where rents are and how much your mortgage payment is going to be with the actual interest rate. Home prices and appreciation being number two. In some areas, there is a little bit of growth still happening, but the market overall has started to cool down a little bit. The home appreciation isn't skyrocketing as it once used to be once we were coming out of COVID. You may be able to actually snag some deals. Some houses are staying on the market a lot longer. Now, in the long term, real estate is kind of always rising throughout time. If you can get ahead of it and get it while it's coming down a little bit, you may be in for some deals. But try to work off of that. Real estate is normally a long-term plan if you're in a buy and hold position. If you do something long enough and holding in real estate, you should be all right with whatever you buy. Just remember to focus on markets with strong economic growth and an increasing population. Number three, the rental market trends. The same problem you're having with buying a property and renting it out is the same problem people are having with just buying a house to begin with. People are having a very, very hard time buying properties, and that's leading to a lot of them to go to renting. That leaves opportunity for people to step in and rent it out. Now, that's one thing that kind of fights each other. You have high interest rates, which make it really hard to make money renting, and you have a lot of people trying to rent. At some point, one of those is going to have to drop, or possibly both of them. Higher rents do mean for a higher cash flow opportunity if you're able to make that work. Just keep in mind, whatever the numbers are, make sure you set yourself up in the right position where you can cash flow with whatever you're getting into. Number four, economic conditions. The economy plays a huge role into real estate. Inflation may be cooling down, but the cost of living is still phenomenally high. People are having a hard time buying and stuff, so that may affect what you're trying to get into. If you're looking at high-end properties, that may not be the best move right now when people are struggling to make ends meet. That's something you have to consider when you're getting into a market also. However, if the economy continues to weaken, that may lead to more properties becoming distressed, which could mean that you can move into something on a discount. As much as I don't like to see it, that's what distressed properties are. Something with people having an issue either economically or just not able to keep up with a property. That way someone can go in there, make them whole, and pick up a property, and they can move on to a better situation. Number five, opportunities may be market specific. If you look into some areas, they may be harder hit than others and may have that decline going on. but some areas are actually growing. If you look at Texas, Florida, or the Southeast, these are markets that continue to grow. Now, they have been impacted recently with insurance and all the natural disasters, which means that you can get some properties for cheaper, but insurance rates are through the roof. I actually have one friend that I'll have him on later on, but his insurance was phenomenal, and he had a property down in Florida, and it was just absolutely off the charts with the insurance premium. But you always want to keep in mind the markets that have the best opportunities. These will be markets with opportunity growth, infrastructure being expanded on, increasing population. All these are factors you want to keep in mind when looking at specific areas. Now, I think what plays the highest part in this is going to be the next two. This one's going to be the housing inventory. We have a huge demand for new housing, but it takes years to fill that demand. I think for the next several years, we're still going to be in a deficit of houses, and we cannot make enough houses to keep up with the demand that's out there. And what that means is supply that's on hand is going to just increase in value, in my opinion, and it's going to keep prices high. Everyone thinks there's going to be a crash out there. I really don't think so, because the inventory being so low is going to keep that from happening. It's just simple supply and demand. Yeah, house prices are very high, but if there's only 100 houses out there, people are willing to pay whatever it is to get one of those 100 houses. And if it comes up, they'll pay whatever they can to get that. That's kind of the situation we're in right now. If we don't have it, people will want to pay whatever it is to get into there. Yes, most people may not be able to afford it. It's just kind of the situation we're in. And finally, new construction versus existing homes. There are new homes coming on market. They can be more expensive, but they also come with lower maintenance fees than a house that's 100 years old. These are all trade-offs when you're going into it. However, but with the new supply coming on market, isn't enough to meet the demand that we have, which is the other half of what I'm trying to get at here. We just don't have enough houses that are being made. They're all in the process. You can see the permits being pulled, but it's still not enough to fill the demand. But as a real estate investor, you're going to need to weigh the pros and cons. Getting into something that you can renovate and do value add, or buying something new with less maintenance that you can move someone in right away. It's all going to be what your strategies are and what's great for your market and where you're investing. My final thoughts are, there's almost never a terrible time to buy a house except for the extraordinary situations, and you never know if you're going to be in one of those black swan events until you're after the fact. I know they say back to when our parents bought houses, the interest rate was very high at, in the teens, and they were still buying houses. People were still making money out there. It's not that nobody bought houses, it was still happening. Even now, interest rates are through the roof. People are still buying. When it goes back down, people are going to refinance into it. Back in 2008, when the houses, you couldn't get a loan for anything back then. Just everyone was scared to get in the market, and they thought it was the worst thing ever. People still made a ton of money off of it. And if you're able to buy something and use the fundamentals of locking in rates, knowing how much your payments are going to be, and you have enough of a cushion that you can weather any storm and have reserve funds in there, you should be all right in almost any situation. But you have to make sure the numbers work. You could have 80% interest rate, but if you bought the house for $10,000 and you can rent it out for $20,000 a month, you're going to be just fine. It's not going to be a problem. But going down and driving to the numbers and making sure those fit for what you need and that they actually cash flow, you have plenty of money to cover yourself. If those work out, you should be good. The real estate market is full of opportunities. It just depends on the strategy you're going to use and how you can pivot to what's coming up. If you look at something and it has a great BRRRR situation, but turns out nobody wants to rent it, great thing about BRRRR, which is buy, renovate, rent, refinance, and repeat. You can take that and just chop off the back end of it. You buy it, renovate it, and go ahead and turn it into a flip and sell it. If you have a way to get out of situations, it's going to make you more flexible for anything you get into, but make sure you have multiple exit strategies. That's all I have for right now. If there's anything else you want to hear about or learn about, please let me know in the comments below. But that's all I have for right now. See you in the next one.